Hi friends, let us examine what has happened in today's Bank Nifty 5 minutes chart. We have expected yesterday, price will have great momentum towards buy direction right from this point. That is what we have uh, analyzed the market and predicted. Exactly following our prediction, the market has given a great upward momentum in a straight single forward bullish candle and thereafter has traversed as if it is a panic cry. So this can be understood that the playing of uh, market makers who induce such candles with a big impression for all retail traders, indicating that the market is going further upside, but whereas they take reverse positions and reverse the market drastically after that. So if those are the cases, if this is the case that happens, then we can further expect when the price can reverse using Fibonacci square fields. So today I'm going to tell you how this Fibonacci square field works in a very advanced way of analyzing price. To do that, uh, I'm making use of Fibonacci extension tool from these two vectors. These two vectors are the vectors which form the expanding pivot. So I'm choosing them, and I also choose a Fibonacci time zone between these two vectors. Now what I do is, since price is traveling further down, uh, I choose two Fibonacci zones, that is 2.618 zone and 3.618 zone in vertical momentum, and similarly 2.618 zone and 3.618 zone in horizontal vector. So if we draw an area exactly between the dimensions I just mentioned, so this area is the point where you can expect price to reverse. For the benefit of clarity, I just remove those just drawings and then showcase here that this is the area that was predicted earlier, that the price may take a reversal. So what other factors are contributing to adding to this sort of understanding, because this is just one layering of price reversal. We need more confirmations to take if price is actually going taking a reversal at this point. To do that, I'm just mentioning the inward frequency where the bias have appeared, and this inward frequency has been tested multiple times. Whenever this inward frequency is tested, the price is either creating a fractal bar or an inside bar. The key point where we have to identify this particular momentum to kickstart is at this level, where price created an inside and outside candle. This is the point where we can take a shot with this low as a stop loss, and uh, the further upward momentum with 1 is to 3 risk reward ratio for a buy call. And to help this further analogy with line work, let us draw a pitchfork between these vectors, and you can see that this vector is beautifully respecting all the wicks that are formed in this time zone. So any wick that is touching this line is creating a factor bar, indicating that price has no option but to traverse upside. Now either you can go a buy call at this level where an inside and outside candle has formed, or there is another metric that you can choose to enter into market in another specific point, that is by drawing a modified pitchfork between these two vectors. You can see that price has touched the exact inward frequency of this modified pitchfork, and that is happening at the inward frequency of a solid structure. So this is a candle that is sharply telling the power of buyers. So this is another entry where you can enter into market with this as buy option and its bottom as stop loss, and the midline of this pitchfork as target. So if we see a long option, a buy option with the previous analogy that we have understood, that is inside and outside candle with 1:3 risk reward ratio. So to have an extra layer of protection, we have kept a stop loss point here, and let us see if price touching this level. So this trade is rendering 1:3.78 risk reward ratio, which is exactly what we are looking at in any trade. Uh, so this is how market has traversed this morning, and you might be wondering why this pitchfork has tested so largely that it has created an immediate downward momentum. Let us also examine what factors has gone into uh, this pitchfork to render it as a solid reversal point. Now let us draw this line as we have mentioned earlier and then extrapolate it to the upward line. Okay, now as you can see, okay, yeah, as you can see, price has exactly touched this outside frequency, and that is happening at a small supply zone created by buyers during their downflow. So we have multiple factors, that are signaling here for a reversal. That is a fractal bar, an inside frequency of this small supply zone, which seems to be very normal in a normal flow, but has a power to create such a strong barrier for price to have this downward momentum. Okay, so inward frequency of this supply zone, a fractal bar, inward midline of this major frequency, and a Newtonian extrapolation of this modified pitchfork. So all these points are indicating that price is going to take a reverse here. So again we can enter a short trade with 1:3 risk reward ratio. So this case it is giving 1:6.96 risk reward ratio. So this is how we analyze price and then enter into market and exit with small stops and greater and larger profit areas. So this is our analysis, guys. In the next video we are going to predict how market is going to behave tomorrow. So with this, signing off for this video. Take it, bye bye.